Thank you so much for that. And I have a guest with me. I am joined by now Mr. Peter McGuire from XM Australia. Peter, hi, good to have you. I really want to start on with the crude oil prices because we're looking at $93 to $94 a barrel holding. That is one, but the gas prices have continued to decline and we are looking at $5 per MMBTU, just about holding half of where we were at the higher point of this year. How are you looking at the energy pack?
Well, happy Diwali first off, Manisha, and lovely to see you. Look, first, as far as if we look at crude, it seems to be very much range-bound and there doesn't seem to be any real breakouts on either side at the moment, so it's very tight. We're seeing that $85 to, say, $95 range for Brent and WTI. So until we see some movement, you've got US dollar index sitting at 112. It's put on a little bit of pace. And if you're looking at the gas price, yes, you've got to be very, very happy with that from a consumption side or the consumer side in Europe. And those megawatt hours are just being crushed. So that's a good sign. So maybe we're at the tail end of this inflation spike.
You know, most of the global banks and brokerages reports suggest that it's not going to be a lot of profit taking from here on. And this quarter perhaps could be majorly between $85 to $100 for the Brent prices. How are you looking at that range?
Well, I think it's probably right unless you were going to see something dramatic happen from a geopolitical front, if you saw something from a weather outages. But we're very conscious where that US dollar's trading. And I think that also you've got to be mindful that, the deals with Saudi and US that's not looking that sharp. So I think you'd probably be erring to the upside, maybe, closer to 100 than, 90. So that's what I think the mood of the street is. But that's for any surprises are going to really change the dynamics of it. And that can happen very quickly, Manisha.
Absolutely. And, since you mentioned Diwali, and yes, there have been a lot of conversation with experts on how commodities should be a part of your portfolio as we move ahead from here, because the volatility will just about continue and you need to have, a perfect portfolio, perhaps, where you have to have commodities within that as well. When you look at a portfolio, what would you want to start including in? Is it going to be energy, precious metals, base metals? Where do you see strength or gains come in?
Well, if you're looking at physical for the first side, you'd have to say silver and gold are a good place to be, because I think most analysts are saying that you're going to see an uplift later this decade and, could happen very, very quickly. So as far as the currencies, we've had massive currency wars over the last 12 to 18 months. So yes, precious metals. Secondly, yes, depends on how you're holding it. They're easy to hold in a physical, but if you're holding from an ETF standpoint or, paper markets, then you'd probably have to look at markets like base metals, predominantly copper, and be conscious as far as, some of those other ones, maybe energy as well. So, yeah, they're the ones I think you've got to keep an eye on. And it's probably food as well if you were looking at some of those as far as soybeans, wheat, from a demand side, Manisha, over the next, 12 to 18 months, I think should be quite strong.
When you look at this year, it hasn't been such a great one for gold and silver. But I was referring to the Goldman Sachs report, which says that commodities for the next 3 months, 6 months, and 12 months should be a part of your portfolio, and you would see gains across energy, base metals, and even precious metals. Where, by the way, their sense is that in the next 12 months, precious metals will give you something like a 23 to 24% of a return. Are you that bullish in gold and silver?
Yeah, in some ways I am, because I think they've been very much held underwater, and that's the situation at the moment. You look at Bitcoin as well at 19,000, so that's a long window, and I'd say over the next 18 months, it could be very wild and woolly as far as the US and global demand, unless they can tame inflation. You've got the central banks, what they're prepared to do with rates. So let's hope by sometime this time next year that they're pulling back the rates and not raising them, Manisha.
When you look at gold and silver again, Peter, what are you more bullish on? Because everybody that we've been talking to say or suggest that silver perhaps could really outperform on the higher side.
Yeah, exactly it, because I think it's got that little brother's been more held underwater than big brother. So yes, there's probably more upside, and that's the real attraction to many traders and analysts are saying that the physical silver market is where you want to be. Shortages and supply issues. A lot of analysts and a lot of traders are really trying to get as much as they can. They see opportunity with it, and it's probably fairly suppressed at the moment. That $18 range is cheap and cheap, cheap.
All right. Always a pleasure listening to Peter and Manisha, your conversations. Thank you so much for joining in. With that, we're out of time on this edition.